as well. But let's get to the first stock on our radar, Monte Carlo. The stock was buzzing in trade last Friday, up around 10%. It is up 21% this year itself. Company's Q3 performance was also healthy, and they've maintained their FY23 revenue growth target of 20 to 25%. Sandeep Jain, the Executive Director of Monte Carlo, is joining us now to discuss demand trends, the raw material situation, and the outlook going forward as well, especially on the export markets, considering the turmoil that we are seeing right now. Mr. Jain, good afternoon. Thank you so much for joining us. Well, before I ask you about the export markets and the situation there, can you give us a sense of how supply side has been, especially in terms of cotton prices? Have they fallen further? Is there an expectation of a further impact because of whatever we are seeing globally?
See, cotton prices are more or less stable. It has fallen as far as last year's levels are concerned, around 30%, but now it is stable. So that is definitely going to benefit us in coming quarters. And as far as exports are concerned, as I mentioned in our last interview also, that we are purely domestic player. So we don't have any exports right now. All our supplies in Indian market only.
So tell us a little bit about the domestic market then. I think by the end of FY23, you would see revenue growth of around 20 to 25%. But what's the expectation as we head into FY24? Is domestic demand still strong? What kind of demand trends do you notice?
See, recently we are having a trade show at Delhi, which has started just 4 or 5 days back. So we are getting very good response. So quantum volume growth, I can't say right now, but I think we'll be able to give our guidance as usual in the fourth quarter of financial results, that is in May, that we can give our next year's guidance. But it seems that the order booking is strong, and exact guidance we can only give in the May itself.
All right. And what about the investment that you were likely to make in your home textiles business? You had earmarked about 20 odd crores. You were expecting 160 crore worth of revenue in your home textiles business this year itself. Wanted to understand what's the 2-3 year outlook on that, and this 20 crore that you were going to invest, what's the timeline for that?
No, the investment is 100 crore in next one financial year in home furnishing wing blanket plant, which is going to be we are putting up in J&K. So that is 100 CR, not 20 CR. And as far as guidance for 160 CR, which we have gave for home textile, as I stated earlier, it should be plus minus 5%. We are on track on that. And home furnishing segment is one segment which is growing around 30% per annum from last 4 or 5 years, and we expect to grow in the same range in the coming years as well.
Okay, 30% in the home textile segment. So whatever we're seeing, US retailers, they are cutting their guidance as far as home textile segment is concerned. Is this something which will be beneficial for domestic players like yourself?
See, they are cutting their guidance in their market, in US market, not in Indian market. Indian market is still very strong as far as our sales are concerned. But yes, there will be macro factors as interest rates are high, increasing, and inflation is still there. It's very stubborn. So that may affect the retail sales in the coming quarters as well. So I can't give you exact guidance for the next year for home furnishing sales. But seeing the last year's inventory and seeing the order trends, it seems that it should be a good year for us also for the next.
So when you say may affect retail sales, can you give us some indication of how bad it could get? Considering that, of course, there are other factors as well. I mean, there is largely a slowdown that's underway globally. You don't have any exposure to the global markets, but eventually inflation, etc., does hit the pockets of people in the domestic market as well, the rural market too. So if there is a slowdown for your own business, how much worse do you think it could get before it gets better?
I think we are seeing almost at the peak of interest rates. There might be 1 or 2 cycles where we can have a 25 basis point, right? And then I think inflation, we should be seeing the inflation coming below 6% in coming 3 to 4 months. So I see that the worst seems to be, behind us, as the rate cycle is almost at its peak, and inflation should come down in next 1 to 2 quarters. And I see that in next 4 to 5 months, or in 6 months, we should see that the demand coming back, and also when the inflation is low, the spending also goes up.
All right, final question before we let you go. Summer is upon us. You've, of course, slowly increased your salience of revenue coming in from summer products. What can we expect this summer?
See, I'm glad to share that we have begun well, and we are seeing, if I talk about our EBOs, like that is retail outlets, we are seeing around 20% year-on-year growth on our EBOs as far as summer sale is concerned in March. So we are very positive going ahead because summer has started well, and it's actually started early as compared to last financial year. So that is why the demand is very strong in March also. So we see that as the average value price of summer products are also less as compared to winter wear products. So we see that we should have a good summer year ahead.
So just to say it again for our viewers, what is your target of winter versus summer going forward?
See, it's not that we have fixed any targets for that, but our long-term target should be around, we should have 40% of our sales from summer wear products and 60% of the sales from the winter wear products.
And how much of that would be the online sales? Right now in the quarter gone by, you did 24 crore rupees. What is the annual run rate from online sales?
See, online sale contribution is approximately 6% of the total revenues, and we are going to maintain the same contribution from the next year also, because also now the offline sales are growing. So earlier it was only the online sale which was growing, faster as compared to other segments. But now as customers have gone back to the shops and shopping is happening at the retail level, offline store also. So the growth should be same in offline as well as online stores.
Okay, all right. We'll leave it at that. Thanks a lot for joining in and giving us an update. By the way, we need to get back to the markets because it's really taken a turn for the worse. We're still at the lowest